China's homeowners have stopped paying their mortgages. The banks are feeling it, and the nation's economy rocks back and forth between instability and doom. Construction stops, mortgage stops, deliver homes and get repaid have become the motto of homeowners. Hundreds of them stopped paying their mortgages, and the Chinese government is trying harder than ever to end the recent real estate crisis that has haunted the country's economy. The mortgage crisis worsened when angry buyers refused to pay mortgages on unfinished homes. This shook the financial markets and made people worry that the problem could spread. Since then, the government has tried to stop the crisis by asking banks to give developers more loans so they can finish the projects. To get buyers to trust the market again, regulators have also cut interest rates. Their plan to deal with the mortgage crisis included letting banks give developers new loans on loans that were about to run out, making it easier for people to buy homes by lowering down payments and mortgage rates, increasing other ways to get money, like bond issues, and making sure that people who had already bought homes got them. But the real estate slump didn't end. Buyers stayed away from the market because the economy was bad and COVID had strict rules. People who can pay are now not going through with it. The boycott was feared to set off a new wave of panic and confusion, and it did. Early to mid-July last year, an online crowdsourcing group called We Need Homes started to complain that developers weren't delivering apartments on time, even though many home buyers had taken out mortgages to pay deposits on apartments that hadn't been built yet and had to keep making their mortgage payments. Soon, the group got together and started to say that they wouldn't pay their mortgages anymore unless something was done to ensure that the apartments would be built. By the end of July, the mortgage boycott had affected more than 320 projects in several cities, but it's still unclear how many homeowners stopped making their payments. S&P Global Ratings thinks that the loans turned down could add up to $145 billion. That's close to 120 billion pounds. This uprising by the homeowners scared the government and brought attention to a market that was already under pressure from a slowing economy and a serious lack of cash. What's even scarier is that the mortgage crisis shows that people don't trust one of the most important parts of the world's second largest economy, real estate or the property sector. An Oxford economics group studying the situation commented on the mortgage boycotts by saying that the boycotts are driven by deteriorating sentiment toward property and are a very serious threat to the financial position of the sector. To explain what that means, a problem in a key market like real estate can affect the whole world's financial system because China's economy is so big. Experts believe contagion is a concern now. Contagion is the spread of an economic crisis from one market or region to another and can occur at both a domestic or international level. Banks will only lend if they believe the property sector is tanking. Also, it's unclear if banks, especially smaller banks in rural areas, can handle the cost of the mortgage strike. It will all depend on the policy, says Deng Shuang, head of Greater China Economic Research at Standard Chartered. Unlike other parts of the world where property bubbles break because of the markets, this is government-inflicted. Demand for homes is also not rising as China undergoes a demographic change, with urbanization and population growth slowing. The fundamental issue is that we have reached a turning point in the housing market in China, says Julian Evans-Pritchard, a senior China economist at Capital Economics. Even if construction starts up again, many developers may not be able to stay in business because house sales are not likely to improve the mood. This crisis shows more than ever before that China's economy is at a turning point. Evans-Pritchard said, "The government is doing its best to find new sources of growth, but that will be hard because the economy has been very depleted on real estate, infrastructure investment, and exports for the last 30 years. The time of very fast growth in China is probably over. This is most clear in the real estate market right now. And there's the truth. This mortgage boycott could not have come at a worse time. Since September-October 2021, when the property crisis started, prices have decreased in more than 2/3 of China's 70 largest cities, and probably all of the smaller ones. More importantly, sales of new apartments also crashed that year. Analysts think that the wave of mortgage boycotts will make the already unstable real estate market even worse. CRIC data show that in the 2 weeks that led up to July 17, 2022, sales of new homes in 30 major cities fell by 41% and 12% in terms of floor space compared to the previous week. Potential home buyers are less likely to buy new homes in cities where many projects have been boycotted, CRIC analysts stated. According to Bert Hoffman, the director of the East Asian Institute at Singapore's Lee Kuan Yew School of Public Policy, Mortgages outstanding as of the end of June totaled 41 trillion renminbi. That's $6 trillion, around 40% of GDP. Total household debt is about 60% of GDP, or 114% of household disposable income. So how does China plan to stop this mortgage crisis? As their response to the boycotts, the authorities went in two ways. First, they let people stop making mortgage payments on unfinished projects quickly without getting in trouble. Officials in Beijing said that the local governments and banks would decide who could be a homeowner and how long the grace periods would be. Second, they did things to speed up the time it took to finish building the apartments. In a newspaper put out by the CBIRC in the middle of July, it said that the commission was asking banks to support mergers and acquisitions by developers to help stabilize the real estate market. Banks were also told to talk to home buyers better and protect their legal rights. The government also said it would help developers finish the unfinished projects as soon as possible. China's banking regulator has also asked banks to lend more money for this to happen. Market experts say that the government could eventually save unfinished projects by telling local state-owned enterprises, SOEs, to work with banks to buy them and finish building. They said that local government financing vehicles, which are SOEs meant to pay for infrastructure and public welfare projects, will likely also put money into some projects. Hong Hao, a former head of research at Bocom International Holdings Company Limited, said that one way to solve the problem would be for local governments to buy unfinished projects and turn them into rental housing. The rental income would then be used to pay back the government bailout fund. Local governments could pay mortgages for people who want to buy homes and let banks write off the bad loans. One of the largest state-owned banks, China Construction Bank Corporation, is also looking into the possibility of setting up a tens of billions of yuan fund with the local government in Hubei province to turn unfinished projects into rental housing for public sector workers. However, this can be a big problem as many local governments need help with tight budgets. Regardless, local governments have been talking with banks since late 2021 about funding SOE takeovers of unfinished projects. For this kind of cooperation to work, local governments need to put up at least 30% of the funding, which many local governments can't do. So will China, the world's second-largest economy, survive a crisis that has proven to be 100 times worse than the 2008 financial crisis? Will they ever recover completely? Not too long ago, Nomura analysts shared their insight, claiming the property market has yet to show signs of recovery, and the latest measures by the authorities may have little direct impact on stimulating home purchases. So what do you think about the mortgage crisis in China? Do you have additional information about the subject? Drop them in the comment section below. I'll be on the lookout for them, and before you go, please like, share, and subscribe to the channel for more videos like this. Until next time.